Ladies and gentlemen, good day and welcome to the earnings call of Microcell Ltd for the financial year ended 31st March 2025. All participants are currently on mute. The floor will be open for questions when the management presentation concludes. Representing Exxon today, we have Mr. Vasant Patel, Chairman, Mr. Ghanshyam Patel, Managing Director and CFO, Mr. Nitin Patel, Executive Director, Mr. Nipam Jani, Senior Accounts Manager, Mr. Pratik Rugani, Senior Accounts Manager, and Mr. Ashish Singh, Global Business Head. Without further delay, I now invite the management to share a brief overview of the company's performance and provide insights into our operations through a brief presentation. Thank you and over to you, sir.
Hi, good morning, everyone. Warm welcome to everyone attending the webinar on behalf of management. My name is Pratik Rugani. I'm going to have a presentation of Microcell Ltd. Post declaring the results with the financial year ended 2025. Just to have a start about the disclaimer. Madam, I hope the screen sharing is on. About the presentations.
No, your screen is not visible, Pratik bhai.
You share.
Okay,
Sir,
I'm sharing.
I'm not talking about my screen. I'm talking about the presentation. PPT.
Okay.
So as everyone can see here, say this is the name of the company. We are having an investor presentation for the year ended on 31st March 2025. To start on a note, it's a basic disclaimer that whatever the presentation is there is no forward-looking guidance given in the presentation. It's about the clarity that what we are trying to give to the investors and the proposed all the stakeholders about the company's finances. This is the company overview. Company was incorporated in the year 2012, wherein say there was a Pirana unit, and then we procured the land for the SEZ unit. At present, the product portfolio comprises of 3 products: MCC, magnesium stearate, and cross carbonyl sodium. These are the names of 2 units. One is at Pirana and second is at the SEZ. This PPT slide will give you a brief about the company's vision, mission, and the products that we cater to, along with the number of experience and the team which we have, along with the global presence that is in 75 plus countries. The brand is also stated here, through which our various finished goods are sold. Our vision is, as a global leader in pharmaceutical excipients, we are committed to sustainable growth, enhancing quality of life, and staying true to our core values. Mission is driven by innovation and strengthened through global collaboration. Is to deliver high quality excipients with integrity, ensuring transparency, trust, and excellence in healthcare and beyond. We have an internal team of 200 plus members. We have presence in 75 plus countries, including say through distributor network. Within the 3 product portfolio, rather finished goods, there are different category of goods that are produced. So accordingly, we have mentioned here 15 plus product grades. Even though the company was incorporated in the year 2012, before Private Limited, we are in industries. So accordingly, we have mentioned it 24 years here. This is just a presentation about our journey so far from the incorporation to till date. Basically, we say if we talk about journeys in decade, The partnership firm was established in the year 2001. In 2012, it was converted into private limited, wherein along with the conversion, we bought land in the SEZ as well for establishment of our the SEZ unit. Later on in year 2022, we became a public limited company with an intent to go public and IPO rather. So in 2023, we started acquiring land for Unit 3, and accordingly, the funds were raised later on. In 2004, if we see the substantial benchmark or the achievements, the construction activities has been started, and the plant has significantly progressed in terms of construction activities and placing an order for all the machineries. That can be viewed by everyone with this slide. These are the say core certificates that we have in place for both our units. So these are the list of certificates, namely XCPET, FSSC, FDA, and as for the company's requirement or country's requirement, the certificates are in place. This slide will give you an overview about the key strength of the company. So we have a global market expansion. Our say products are built upon use of latest technology. We are committed to quality excellence. We have a good in-house supply chain team, and this is precisely a business operation and supply chain department who takes care of say relevant delivery processes, and with a vision of even a sustainable and responsible growth. These are the core product portfolios within which we have different grades of product. MCC is one of our main product. Apart from that, in the current year, we have come out with say a couple of new products in addition to what we are coming out with in Unit 3. You can see the slide wherein the name of products are mentioned. MCC is the core product. SMCC, MCC spares are the recently two new developed products. Microcrystalline cellulose with CMC. This is an co-processed product with the use of MCC. There's another two products, CCS, magnesium citrate, and powder cellulose. These are all in-house product developed from our end, from our R&D and QC team. So the research work was going on for the last 2 to 3 years. So going ahead, you will see along with say sales from the new products from Unit 3, along with say sales from SMCC and MCC spares, which are say more premium grade excipients product, wherein basically the raw material is MCC. So we are not bit concerned about the procurement of raw material for those products. These are the say primary industries that we serve to. At present, our more focus is on pharmaceutical, nutraceutical, food and bakery, cosmetics, and welding electrodes. Apart from that, there are other technical grades as well, but those don't compose it more than say around 2 to 3% of revenue. So we have preferred to keep the slide as precise as possible. This is say a world map wherein our presence is say reflected. As we have stated earlier, we have presence in around 75 plus countries, including the distribution ship model that we follow for our business. So for if we talk about exports, say we have 17 plus years of export experience. After say almost 2 decades of experience, we have catered to around 75 countries. If we talk about the financials of 25, the breakup of revenue has been shared here, wherein the 53.49% the export revenue and balance is in domestic revenue. There's an increase in the say domestic revenue percentage this year as compared to previous year, as we are targeting Indian MNCs from the last financial year. This is an slide wherein overview of our core product MCC and CAGR of expected CAGR of our excipient industry is reflected. If we talk about the say SWOT analysis, these are the say main strength of our company. innovation-driven R&D, diversified market presence, dynamic leadership, favorable industry tailwinds. As you know, the pharma is an hot sector right now. So basically, we fall under the category of pharmaceutical excipients, so bulk drugs. Strong financial backbone, strong supplier distribution network, and proven expertise in process scaling. These are, say, the founder promoters of our company, Mr. Vasant Patel, who is the chairman of the company, Mr. Ghanshyam Patel is the MD and CFO of the company, Mr. Nitin Patel is an executive director of the company, and Mr. Vinod Patel, who is an executive director of the company. Apart from these four directors, we have three independent directors in place as well, and one woman director in our board. This slide represents the key business highlights till the end of financial year 25. Expanded and diversified product portfolio, operational and manufacturing excellence, commitment to regulatory and quality standards, robust presence in domestic and international markets. This is the photo or the picture of the plant personnel along with the images of the admin buildings of both the plants, along with the photos of core machinery at the Dahej unit. The photo of the machinery that you are able to see is of glass line reactor, which is the most advanced technology that is used to produce MCC and other excipients grades of products. If we talk about the capacity of individual plants, say at Pirana, we have installed capacity of 2,000 metric ton. At Dahej SEZ, the capacity is around 7,200 metric ton per annum. If we talk about the capacity utilization of Pirana unit, it was 100% in the last fiscal, and for Dahej unit, it was 95%. Along with, say, the photos of the plant, you can see the product flexibility and the customer-centric approach that we follow, and the grade of raw material, that is the supreme most grade of raw material that we use to produce MCC and other finished goods, namely CCS and MS. Now, I think the most important slide that most of the investors was waiting for. We are coming out with an unit 3, wherein the 3 different products, we are coming out premium range of excipient products. CCS, we are already catering to our existing customers, but we are coming out with CCS with an, say, more enhanced capacity. Along with CCS, we'll be, say, producing CMC and sodium starch glycolate, SSD namely. In present, our installed capacity for both the unit is 9,200 metric ton per annum, which is going to increase by 12,000 metric ton per annum with added, say, range of premium excipients range of products. You can see the revenue, say, tentative revenue potentials once the unit is commercialized and the production timeline that what we are looking for. As such, say, taking into account UPSI in place, and we are not supposed to give any kind of forward-looking guidance, but this is just a rough idea wherein our present order book can be, say, we have tried to ensure that give tentative idea to investors about our present order books. We have confirm order, good confirm order for, say, next projected 3 months, stable workflow and production continuity, and predictable demand enables strategic planning. These are the, say, tabular present, or rather the pie chart wherein the presentation of the capacity breakup is done from our end. The capacity is already stated from my end earlier. This is chart just reflecting the, say, component of the revenue, export and domestic. I think we already discussed it about it. It is in form of chart. I think most of the, say, investors or the attendees who are attending the webinar must have gone through the financials, just the financial synopsis of the, say, broad parameters wherein, say, the bottom line was around 33 crores and revenue, rather top line was around 265 crores. We'll discuss in length about the financials and operating performance in the question and answer round. So I will keep this slide, say for later on. These are the balance sheet figures, which is accessible to everyone through NSE portal as well and through our website as well. Equity capital, reserve and surplus, borrowings, other liabilities, fixed asset, loans, advances, CWIP, and other assets. This is a pie chart or the presentation of the revenue breakup, revenue, PAT, EBITDA, what we have achieved, and the year-on-year percentage increase in the growth that your company has able to achieve. Revenue from operation has increased by 8%. There's an increase in PAT by around 10%. There's simultaneously increase in the EBITDA by around 12%. The EBITDA, there is no change in the EBITDA margin, and there's a significant drop in the borrowings that what we had as compared to the previous year. Thank you everyone for the patience hearing. I think we can open the floor for question and answer round, one question at a time if possible, so that even our internal team can answer it accordingly, and so there's no even confusion. So in each and every question of the investors are adhered to. Siddhi, over to you.
Yeah. We'll now begin the question and answer session. Participants who wish to ask a question may raise their hand. We'll take one question per person as said. We'll take the first question from Mr. Himanshu.
Yes, please. Yes, sir. Good morning.
Hello, am I audible?
Yes, sir, please.
Hi, sir. Good morning. Congratulations on a steady state of numbers and thanks for the opportunity. Sir, I wanted to check on what is the current mix of the 265 crores of top line that we did it this year. What is the mix of premium products value added like CCS and MS?
Uh, Sir, hi, my name is Pratik. I'm going to answer to your say concern. Say at present, the premium range of component consists of around 10% of the revenue. Balance was out of say MCC, that is our main product.
Okay. And sir, what would be our realization difference between, let's say, an MCC and a CCS or higher average premium realizations?
Sir, tentatively, what we are able to understand the market scenario as of now, it will be around 3.5 to 4x from the say existing market price, prevailing market price of MCC.
Understood, sir. Understood. Sir,
Yes,
I
please.
wanted to also understand on that because we have a listed peer as well. And when I look at the margins of the business, they are mostly into MCC currently. They do not have that high value added products right now, but still they have a better operating margins. And from what I can understand is that is due to the material cost that the company has. So there is a significant difference in the material cost between our listed peer. So any idea on that? Any outlook on that?
Uh,
Sir, we'll take one question so you can answer this and then we'll move to the next attendee.
Yes, madam. Sir, as per our company policy, say we prefer not to comment about peers' financials much. We understand that we are doing fair enough, and we expect it to deliver in future as well.
Okay, we'll take the next question from Mr. Mahesh.
Yeah, hi. Am I audible?
Yes, sir.
Yes, sir.
Yeah, sir, my question would be more on the capex that we are supposed to do, which is like if, what you have said in the presentation that you'll be adding 70 crores this year. Just wanted to know what is the capex on that?
Sir, the capex is already part of the total capex that is going to be required. It's already part of the DRHP. So the tentative capex will be around 55 CR.
We'll take the next question from Miss Nupur Karnani.
Yes, madam. Hi.
Yeah. Good morning, everyone. Firstly, I would like to congratulate the management for the consistency in the results. I just want to ask about the current capacity utilization at the Dahej and Pirana manufacturing units, and also would like to understand that the products with which we are dealing is MCC, CCS, and CMC. So, what margins we'll be enjoying in these three categories?
Our chairman Vasant Patel is going to respond to your question, ma'am. Please.
Yeah, hi, good morning. Yes, about the utilization of our unit 1 and unit 2, as mentioned in the presentation. So currently we have been utilizing our unit 1, which is called Pirana unit, that is almost 100%, and the Dahej unit is around about 95% utilization.
We'll take the next question from Mr. Priyank.
Yeah, hi, madam, please allow at least 2, 3 questions to clarify. In one question, nothing can get clarified, please. Hi, Ghanshyam ji. On this, so we would have done, say, around 9,000 tons in last year, and on the revenue of 265 crores, our average selling price comes to around 300 rupees per kilo. Now coming to the unit 3, which is Kheda, we were planning for a large capex versus what I understand is that we are just adding a capacity of 2,800 crores, and we have a very huge land parcel. We were supposed to go for a rights issue and then do a capex of a large capacity on a one go, given that we have a huge demand, visibility, and the exports opportunity that we find. So please help me on the strategy on this Kheda. How much of that we are adding and what is the plan ahead? We are adding 2,800 crores. What would be the average selling price from all the three products, which is CCS, CMC, SSG, and what would be the EBITDA margins that we envisage from this unit?
Sir, hi, sir. My name is Pratik. I will try to say respond to your concern. Basically, say to answer your question one by one. Say from unit 3, the average realization for all the three products will be roughly around 600 to 650 rupees per kg. And when we are talking about say what the right issue that you have stated, say we have already got an approval from the exchanges for the DLF. So that say fundraising for that unit or rather the expansion that what you are able to foresee is in progress. It's a moment of time when the board will meet and decide about the exact right ratio and pricing that will be decided.
We'll take the next question from Mr. Aman Soni.
Hello, am I audible?
Yes, sir.
Sir, my question is we are entering into high margin segments and which are expected to improve blended margins. So, what margins target are we looking for FY'26?
Sir, once the unit 3 is say commercialized, the margin for the premium range of product will be roughly between 25% on bottom line basis.
We'll take the next question from Mr. Dinesh.
Hello, am I audible?
Yes,
Hello,
sir.
sir. Okay.
Yes,
Thanks
Yeah.
for giving me, the opportunity and good set of numbers. Sir, may I first of all request you to, put the deck, which the PPT on, the company website or BSC portals and all that, like NEC portal, so that we can, yeah. I don't see that, document there.
Sir, it was uploaded before the start of the meeting as per the required norms in place. So I think by the end of this webinar, I think you will be able to access it.
That's great. Okay.
Yeah,
Thank
it's
you.
there in the NSE portal.
Sure,
Please.
I'll check that out. Okay.
Fine, fair enough.
Okay, sir. Thank you for that. And my question, sir, is like you mentioned, this unit 3 when that will come up online. And how much in terms of percentage work is done? Do we have fixed contracts for that? And will it be only specific for the premium, products like as you mentioned? So will it have higher margins than the current one? If you could just talk about, and what are the revenue potential you see in the next 2-3 years? If you could just focus on the complete details on Unit 3, that would be great.
Sir, sharing details related to Unit 3 will be fair enough, but giving forward guidance for 2-3 years will be a bit difficult from our end. Yes, we are expecting, say, commercial production from Unit 3 to be started around in the month of September to October. And the margins will be much higher than what we are having right now. The margin levels is on a conservative basis is around 25% for standalone on Unit 3.
Mr. Neil, you can ask your question now.
Hello, hi everyone. Nice to connect with you after a while. Am I audible?
Yes, sir. Yes, sir.
Yes, so I think most of the questions that I had in mind kept getting answered in the previous participants, what they were saying. So, okay, so I understand that production from the new Unit 3 will start around September or October. I understand that you're going in a phase-wise manner for ramp up. Am I correct in that?
Yes, sir.
So could you tell me a bit about how you're going to phase it? Like by when do you expect phase 1 to get to a level where you begin work on phase 2, in terms of productions to start?
Sir, as stated earlier, we are expecting commercial production for Unit 3 phase 1 in the month of September to October 2025. For phase 2, once the fundraising is taken care of, the land is already acquired by us and the related land development work is already started. So once the fundraising is done for the phase 2, we expect that say unit to be commercialized by say around June 2026.
Okay. And the revenue at peak capacity in phase 1, I think I heard 70 crores. Is that right? Phase 1
No, sir.
peak revenue?
No, sir. It was taken into account the number of months for which the commercialization was available. So
That
you
is in
can
year 1. So 70
multiply by
crores is year
2.
1.
Yes, sir.
Okay, so but that is not getting us to full capacity utilization. So what is the at peak capacity of this phase 1? What will be our revenue?
Sir, it will be somewhat around 150 to 160 crores.
Okay, so in year 1, you're assuming that will be at 45 to 50% utilization level.
Exactly, sir.
Okay, and year 2, and this going from 70 to 140 will happen in the second year, or you expect in the third year?
It will be happening. It will be happening in the third year, sir.
Okay, so let's say 45% in first year, probably 70 odd percent in second, and then whatever is the maximum that you can do in the third year.
Exactly, sir.
Okay, and at the same time, you're likely to do a rights issue or some sort of a fundraise, which will
Sir,
enable you to go construction for phase 2 also.
Exactly, sir. That will
Okay.
be a
What
brownfield
kind of a
expansion. That will be a brownfield expansion.
understood? What kind of a fundraise would be required for this, and how much will you do equity dilution?
Sir, we don't foresee any kind of equity dilution as of now. Uh, we have received an approval from the exchanges for the draft letter of offer for say proposed right issue. So what we are able to understand, the approval has been received up to amount of INR 40 crores, which is there in public domain. And the balance, the project cost will be funded out of internal accruals. So at present, we don't foresee any kind of an equity dilution when it comes to promoters holding.
Understood. Understood. And this phase 2,
Yes,
the
sir.
same way you explained to me for phase 1, that in the first year of commercial production we'll get XYZ amount of revenue. In 3 years we get fully ramped up. Is it the same likely to be for phase
Sir,
2 in terms of?
it will be much earlier in phase 2 for phase 2 because this same product, that is MCC, that what you are coming out with. So it will be much easy for us to target our existing customers to purchase the goods and get with the orders that we have already shared with you in the PPT.
So just so that I can work on some sort of a mental model for myself, I'm assuming by FY'28, which is that this is FY'26, next year FY'27, third year FY'28, phase one will be fully, in terms of almost at peak capacity, which will be
Yes,
like,
sir.
let's say, about 150 crores. In the meanwhile, phase two will be ready and also be producing. So let's say this third year from now, FY'28, 150 crores from phase one. What do you expect from phase two?
Sir, phase two, I need to point out, give me a moment, please, sir.
I mean, of course, this is just guidance and we'll not hold you to it. It's just your expectations.
Sir, roughly it will be, say, revenue of around 220 to 250 CR on standalone basis for phase two.
Neil, sir, please get back in the queue. Will take you afterwards. For the next question, I request Mr. Prabal to ask his question.
Hello, hi. Am I audible?
Yes, sir, please.
Yeah, so I'll actually continue the thread that Neil was asking because that is the only thing that I also wanted to know. So, sir, first thing I wanted to understand your phase one. You mentioned, I read somewhere that your environmental clearance is pending or something from Gujarat Pollution Board or something. Is that sorted?
So to the extent what we understand, there is no such issue pending. Yes, there is one matter related to NGT that I hope, I am not sure whether you are referring to that matter or not. But yes, there is one NGT matter which can be termed as a contingent liability, for which when we talk about the contingent liability, there are three scenarios: remote, possible, and probable. So at present, that contingent liability is remote, according to us.
So basically, what I want to understand, you're saying phase one will commence by September or October. So do you have like all the necessary approvals to begin that unit?
Sir, when it comes to establishing a pharma unit, before starting a construction activities, you need to obtain relevant approvals. No doubt, say for commercialization, there's a different approval in place, which we understand or which we foresee, which won't be a big task for us. Taking into account our existing two unit already in place and the main product CCS, we are already producing it with a lesser capacity.
Mr. Mahesh, you can ask your question now.
Thank you. Sir, my question would be more on your 70 crore revenue this year. You have done 55 crores capex. So what I understand is that the asset turn for our business is around 3 times. Am I correct on that assumption?
Sir, that is fine for the next fiscal, if you're talking about, because the capacity utilization on a pro rata basis, that is say effective use of commercial production from the month of October. So that
But
is
we
why
have,
we have
sorry to
70
interrupt,
crores.
but you have done a capex of 55 crores for the phase one, right?
No, sir, that is in process.
So what is the total capex for the phase one?
It will be, sir, 55 crores, but that is in process. The entire capex will be reflected in the next financials.
Yeah, so that means the asset turnover, the peak capacity, the peak revenue from that unit is 150 to 160 crores, what I understand. So
On
55,
stand-on basis, yes, sir, but we need to understand and consolidate, say, turnover ratio for unit one and unit two as well.
no, but what I'm trying to understand here is when you have put 55 and you're able to generate 160 crores, the asset turnover is like 3 times, right?
That is fine, sir. I'm talking about that is on standalone basis, yes, but with an higher profit margins.
Yeah, that is okay. So what we should take from here on is any phase that will be coming up ahead. So any peak revenue will be like we have to go back and rework and then like asset turn is like 3 times of any
Sir,
capex that you do.
for unit one, unit three, the first phase that what you are referring to, it's an altogether different range of product that what you are coming out with. If you are trying to refer to say next phase of expansion, we are coming out with an MCC with an roughly a capacity of around 12,000 metric ton per annum. So that asset turnover ratio will be much higher side. So in order to say reach to a conclusion, unit three, phase one plus phase two, the say asset turnover ratio won't be less than 4.5 to 5 times.
What is the differential between the export margin and the domestic margin on your product line, sir?
Sir, roughly it is around say 10%.
And you expect the financial year 25 ratio to sustain in the next year also, 53 and 46?
Definitely, yes, sir. Looking to the say expansion of and the commercialization of Unit 3, that ratio is going to say even the export ratio is going to increase as compared to domestic, because we have targeted audience for the export market.
We'll take the next question from Himanshu.
Yeah, hi sir. Thanks for the opportunity again. So what
Yes,
I
sir.
understood was phase one was 150 crores peak revenue, 150, 160, and phase two our peak revenue could be 220 to 250 crores.
As of now, tentatively, yes.
Yeah. So sir, provided that our phase one stands out on our expectations, so when do you plan to start with the phase two expansion? Just on a rough numbers.
Sir, we have already said so we have already answered the said question. So once the fundraising for the second phase is done, I think we are expecting commercialization to begin in the month of June 2026.
Understood. Understood. Okay, sir. June 2026. And sir,
Yes.
one more question on raw material side. What is the outlook and what is the scenario on current raw materials? And are we finding any struggles to acquire raw material at a significant price or whatever it is?
No, sir. We have an established based on our suppliers, and say we have sufficient amount of say order booked for the export orders, along with the say quantity commitment with the suppliers as well. So we don't foresee any kind of negative impact on our financials when it comes to procuring the raw material.
Ms. Nupur, you can ask your question now. We'll take the question from Mr. Manjul.
Hello. Hello.
Hi, sir.
Yeah, am I audible?
Yes, please.
Thank you for the opportunity and congratulations for decent set of numbers. Sir, my first question was that, sir, when we are saying in past, if I'm looking at our margins, so I'm new to the company, it shows that we have graduated from 8%, 10% to 16% till FY'25. And now we are talking about the unit 3 at 25% approximately. So, sir, what we were doing in the past to cater to the margins of 16% and what we are planning to do so that our margins would increase to 25%. So, sir, it would be really helpful if you can take us through the journey.
Yes, sir. Just to say, be precise enough, when we talk about the margin percentage of 25%, it is always on a standalone basis for unit 3. There needs to be read with the existing capacity, wherein I'm not sure from where the margin of 15 to 16% has been derived. If you are talking about the PET levels, the present margin is around 12 to 13%.
So Ghanshyamji, basis the numbers right now, the EBITDA margin, so I'm talking about the operating margins. It is reflecting on the whole basis that's around 15 to 16%, correct?
Yeah, definitely.
So which products we were actually working on, which led us to this 15 to 16% margin? And what new products we are planning to do, which will improve our margins to 25%? So that was what I wanted to understand.
Yes, sir. Sir, for unit 3, we are coming out with 3 new products, that is CCS, CMC, and SSG. Along with, apart from the say benefits that we are going to have from that new products, we have developed 3 new in-house products, namely MCC spears, I think powder cellulose, and I think SMCC, yes, is a 3 new products that we have developed in-house. We are working for those 3 products for last 2 to 3 years in-house. Our in-house R&D team was working for it. So that has resulted into a better margin, for which say in future you can expect the same quantity to be say multiplied going ahead.
Okay. And sir, when we are saying that we will do phase 1, which will have 2,800 metric ton. So what will the capacity of phase 2 have?
Sir, the capacity of phase 1 will be 2,400 metric ton to be precise.
Okay.
And the capacity for phase 2 will be 12,000 metric ton. Taking into account, say we are going to produce MCC in phase 2.
Okay. Okay. And do we have visibility of orders? So basically, when we are going for such a big expansion, so what if I'm looking at it? We are at 12,000, close to 12,000 metric ton per annum capacity right now, and while with addition of phase 2, which we are expecting in June 2026, we are doubling our capacity, right? So do we have the visibility behind placing such a huge capex? It would be really helpful if you can throw some light on that.
Sir, taking into account, say the presentation, what we have said, wherein both our plants is almost working at 95 to 100% capacity, read with the order book for the domestic and the export market rate what we have right now. What we understand that say achieving the say desired capacity utilization level for unit 1 phase, unit 3 phase 1 and unit 3 phase 2 won't be a big task for us, because our existing customers are only going to say buy this product from us. So we don't see any problem when it comes to capacity utilization or selling of these finished goods.
Ms. Nopur, you can ask your question now.
Yeah, thank you. So I just would like to ask one thing, that you said that the third manufacturing unit that will be set up in Navgam Kheda. So from that unit, the PAT margin on standalone basis will be somewhere around 25%. So just want to understand that from that in the total revenue mix, what will be the percentage from that particular unit, from those products, premium products, how much they will be contributing in the total revenue of the company? And also, if I look at the financials, so debtors to sales have increased from 21.91 to 24.52. That indicated a rise in receivable relative to revenue, because it just raised from somewhere around top line increased by 8%. So could you please elaborate on how the company plans to manage its receivables and overall working capital going forward?
Yes, madam. Just to address your concern point wise, say if we talk about if we talk about the total revenue from unit 3, unit 1 and unit 2, that's on a console basis, we are roughly if only phase 1 is considered as of now, we are roughly expecting around 400 to 425 crores of revenue. Post phase 2, we are expecting it to say taking into account the further development that happens post June 26. And if say the percentage of the premium range will be around 25 to 30% of the total revenue. That is from unit 3. Apart from that, one of your question was regarding to the say increase in level of working capitals. Yes, say in the last quarter of the last financial year, we have say entered with an say not kind of an agreement, but we have started selling goods to Indian local MNCs as well. Sorry, Indian MNCs. So wherein the initially just to an entry point, some certain kind of liberal payment terms was given by us, wherein the same is reflected in the say increase in the ratio of domestic sales as well. So that's the main reason why there is an certain or to an extent time being increase in the working capital levels.
So how you're going to manage the thing? Reason being that definitely your ratio in the domestic sales has increased, but accordingly, if I look at the top line, it has shown a surge by 8%. And if I look at the rise in debtors, so that is somewhere around 24%. So your need for working capital has increased, and how you're going to deal with that? Because cash conversion cycle has increased by 10 days, and definitely that's going to affect your business.
Madam, to the extent, if we talk about the free cash flow that what you have generated in the last fiscal and what you are expecting in the current fiscal, we don't foresee any kind of additional working capital requirements in future, at least for unit 1 and unit 2.
Mr. Dinesh, you can ask your question now.
Okay, sir. Thanks for giving me another opportunity. So my question is very specific to, if we go to the page number 11 in your financial, which you had published earlier, where we see the Dahej SEZ unit, right? The export sales have remained flat, almost no change there. And whereas domestic have in fact declined by a few crores. So just can you explain what is going with this Dahej, facility? Why are we not seeing, growth? That's my first question, and then I'll ask the second question later. If you could answer this, please.
Sir, I hope you are referring to the current financial 24-25, wherein you saying the
Yeah,
say
if you
stability in the sales.
yes, if you go to page number 11, which you had given on the financials, right? Page number 11, you can see the Dahej SEZ unit exports have been literally flat, that is 140 crores and 140.7 crores, whereas domestic sales have been almost around 9 crores. Okay.
Yes, sir.
So my question is like, why is that? Like, are we not is it, I understand the capacity utilization is 100%, assuming that, so no additional capacity, but are we expecting any decline in the realization or pricing, because of which we are not able to generate a higher, revenue here?
No, sir. As you stated, say we are at such a level of production capacity where we need to say understand, and we are say categorizing. Say if we talk about say the industry that we serve, the capacity utilization has resulted into say export sales into a limited or a restricted level. That what you have stated to us, which has been compensated by the increase in the domestic sales.
No, but for the Dahej unit, I'm specifically asking. See,
Sir, that is what I'm trying to say. On year basis, the sales at Dahej unit, if we talk about export, it has remained on the same levels, which has been compensated by us. Say, ultimately, the financials is published for unit 1 and unit 2 both. So, if you have good option or the market available for our Pirana unit, then we can always have an option to sell it into domestic market. So, accordingly, from Pirana unit, you can see substantial increase in the sales.
right.
There, if you stated, it is already working at 90 to 95% capacity. So the order book is there in place and with an predefined rate subject to certain terms and conditions. So there is no much growth in, if we talk about the Dahej unit sales.
Okay,
But
so
company has achieved order growth by way of selling into domestic market.
Fair
Quite
enough. I understand. So are we expecting any further realizations from the existing facilities which we have? Because I'm assuming the unit 3 will take some time to, come up online and stabilize, right? So are we
Yes, sir.
expecting any increase in the pricing and, all that? Because I'm assuming volumes will remain more or less same for the existing units, right?
Yes, sir, but
Yeah.
the product combination is going to change substantially. As I highlighted, we have developed 3 new products, namely SMCC spears and cellulose powder as well. So that combination is going to say increase, and that are premium range of excipient products. So we can see in terms of quantity, it might not change much, but yes, the revenue realization will be higher.
We'll take the next question from Sanika.
Hello. Hello.
Yes, madam.
Yeah, so sir, right now we are at around 96-97% kind of capacity utilization, and our next unit is coming in September, October. So can we say that our H1 numbers are going to be relatively flat as we compare it on a YOY basis? And for the full year with the unit 3 phase 1 coming in, are we looking at around 350 crores of revenue for FY'26?
Madam, sorry to say, but answering to the precise requirement that what you are looking for will be, say, not practically possible from our end to quantify the figures. Take into account, we are not supposed to give any kind of forward-looking guidance. Say, if we talk about say, we can share the capacity levels and the premium range of products that are there, and contribution of it that is going to increase in the coming, say, half year. Rather, to be precise, until 30th September 2025. Post unit 3, we can see a substantial increase in the sales and the revenue and the bottom line levels, taking into account realization from unit 3.
Okay, so in H1, from where are we expecting the growth except from the premiumization of the products?
Madam, as I said earlier in the last questions, the capacity for the new products that what you have said developed in-house, we are going to sell that more product, which will be a kind of a basket of product along with the MCC. So that might have an positive impact in the say total revenue, because the 3 new products that what you have developed is also categorized under the premium range of excipients product.
Okay, okay, thank you.
Thank you, madam.
Mr. Aman, you can ask your question now. Cool. We'll take the next question from Prabal Jain.
Yes, hi. First of all, a very humble request to Fin Portal people, Abhishek Bhutra and Hetvi ma'am. Please let us actually ask some follow-up questions. Otherwise, there is no point of this call. If you are willing to let us answer like one question, two question, then it doesn't serve the purpose. Like the point is to actually have some follow-up and understand what is happening. So please let us. Actually, if you want to place limit, place it on 2 minutes or something like that. Okay. Now coming to this
actually, problem is that there are too many questions, and if one person keeps on asking the question, the other people won't get the chance. So,
no, 1 minute you can keep. No, sir, 1 minute you can keep. You have 45 minutes, 45 people you can entertain in one minute. 45 people you can entertain, na? And everyone will be able to like have a satisfaction. Management is anyway not coming on public call, right? The only time we have to interact with management is 2 years, 2 times in 1 year.
the frequency will also increase, but that's okay. We'll keep in mind. You can ask your question.
Yeah. So I have some questions, Ghanshyamji, on your unit 3. So first of all, you are saying that you will be having all the approvals in place, right? Before you commence the unit from NGT, from pollution board, everywhere, right?
Yes. Sorry for the inconvenience, sir. We'll try to ensure that your most of the questions are answered as per your precise requirement. I think our chairman is going to respond to your questions. Chairman, sir, over to you.
Yes. About your
Yes, sir.
question, of course, yes, already we have received the certain and confirm whatever is required, the certifications and approvals from the department at the time and at the level of what we are going through. And of course, yes, as mentioned by Pratik earlier, that the once we are commencing our production lineup, then the certain also approvals and license will be required for the final approval and commencing the final product. So of course, that would be availed from our side on time to time basis.
See, sir, please don't get me wrong. The reason why I'm asking is this. I'm very sure we have, like, this has been a very critical issue because we are already 1.5 years, in the process of this. And the delays, I'm very sure it's coming from approvals. I understand India as a country, it's fine. The only liberty I want is let us ask the questions at least. Like, you're not even allowed to ask the questions. Okay. So, unit 3, sir, you are saying that phase 1 will be your value added products, right? And you are saying the capacity will be 2.8K metric ton per annum, and you are expecting better margins here, something to the tune of 24-25%. And phase 2, you are saying you will add 12,000 metric ton per annum of the MCC product only, which is your existing product line, 95% top line. Am I correct?
Correct.
And sir, the phase two, 12,000 metric ton per annum is a very big capacity. Like currently you are at like, I think 9.5 ton, 9.5K metric ton, right?
Yes, for unit and unit 2 together.
Combined, correct. So on a standalone basis, if I understand unit 3, so in unit 3, you will add completely whatever new capacity you have right now in phase 2, correct?
Yes.
Okay, great. So is it very fair to assume that you are doing right now 260 crores revenue? So in unit 3 alone, you will be pulling off, in phase 2, you will pull off at least 260 crores, right?
Yes.
And now phase 1 will come first. So phase 1, 2.8K metric ton per annum is your VAP products, which is 25% margin. And you are saying that 70 crores you can do in the first year. But what is the peak peak revenue of phase 1, the VAP products?
Sir, it will be 150 crores of phase
This
1,
is
unit 3.
for, yeah, this is only for phase 1, unit 3. Okay, so 150 for this. And phase 2, which for which you will be doing rights issue, right? As you discussed with Neil recently.
Yes, sir.
Okay, and rights approval you have got. So, sir, now my final question, the unit 3, what is the maximum top line you will be doing, assuming phase 1 goes live, phase 2 goes live, and you discussed something about phase 3 also, if I'm not wrong. So, assuming you have all the 3 phases going live, what is the peak revenue, and by when, what is the financial year when you expect all the 3 phases to go live and peak revenue to be kicking in?
Sir, financial year 29 can be considered for it, and the peak revenue for standalone unit 3 will be 150 for phase 1 and around, I guess, let me work it out.
260, or I would rather say like 260 is on 10K. So I'm assuming like let's add 20% more. So I think 320 crores for phase 2, right?
Sir, at present it will be too optimistic to assume say 20% more. We are expecting it around 275.
Okay, 275, no issues. And phase three, can you give me once more color? What will be the product and what will be the capacity?
For unit 3, phase 1, you are talking about?
CCS.
Yeah. See, we are all talking about unit 3 only. Yeah.
Yes, CCS, SSG, and CMC.
Okay, and what would be the capacity?
It would be 2,400.
Okay, and potential revenue from this? And this is the VAP product, so I'm assuming 25% type margin, 20-25%.
Yeah, 150 crore.
150 crores. Okay, perfect. So what I'm understanding is you will be adding total, and for phase 3, you haven't gotten the fundraise is yet to commence after the rights issue happen in phase 2 commences, right?
Yes.
So the land acquisition has been taken care of.
Yeah.
The construction activities will commence post the fundraising goes through.
Okay, fine. So, okay, great. And sir, one last question. The 70 crore revenue which you are projecting for phase 1, do you have confirmed orders, or you are assuming that once it goes live, you'll be able to pull off 70 crores?
Yes, already we have orders for this amount, and the same amount we are going also to supply to our existing customers worldwide.
Okay, so you have confirmed orders. Okay, sir.
Yes.
Thank you so much, and all the
Welcome.
very best. And no, anything, please, sir. The only question here is if you could just give us a monthly update or a quarterly business update, that would be very fine. And every quarter, if management can come on Concall, that will be the icing on the cake. Like that is the only thing which we want.
Sir, definitely we are working on continuous improvement, and we'll definitely try to ensure that the same is.
And it will actually work in your favor, sir. Let me tell you, because there are only 2 players in the market, right, who are producing these kind of products. And I think the new product which you are commencing in phase 1 in unit 3, I think you are the only player in India who is producing that product. So that will help you also to gain the visibility and a better investor appeal, right?
Yes, sir. Our intent is to reward to all the stakeholders. So definitely it will be taken care positively.
Sure, sir. Definitely. Thank you so much, and hoping the best for you. Thank you.
Thank you very much, sir.
Mr. Priyank, you can ask your question now.
Again, thank you. And I add to what the previous participant had a query. Now, sir, what will be the capex for phase 2 and phase 3? Phase 1, I understand, is 55 crores. Phase 2 and phase 3?
Sir, for unit 3, let us talk about phase wise. Phase 1 capex will be around 55 crores. Phase 2 capex will be around 55 to 60 crores. And when it comes to about the capex plans and the fundraising, We have already got the approval, that is a DLF, that approval has been issued for the further fundraising. That is in form of right issue, that what we are planning in near future.
Got it. And Pratik, if you can also help me for the numbers of FY'25, what was the total volumes that we sold from the and the breakup of that within domestic and exports?
Sir, if I hope you're trying to, your precise requirement is about the quantities that what we have sold.
Volumes sold in FY'25 for exports and domestic and total volumes.
Yes, sir, fair enough. Just a moment, please. Sir, the quantity was around, say, apart from the capacity, due to the, say, orders book on hand, we have purchased certain semi-processed goods as well, wherein certain only 2 process was carried out from our end. So apart from our existing capacity, taking into account, say, huge order books on hand, and to ensure that the customer remains with us, we have carried out certain outsourcing work as well. So that has resulted into say around quantity terms, if we talk, it was around say 12,000 metric ton quantity was sold during the year from both the plants.
So this, what I understand, this includes the manufacturing plus the trading portion. So if you can give a clarity on this, how much of that was manufactured, how much of that
Sir,
was traded?
9,000 was manufactured in-house by us, and around 2,500 to 3,000. It is not, say, you can term it as trading, but for us, it was kind of an procurement of a semi-finished goods. And then, say, later on, a certain level of process was carried out in-house as well. Taking
Would it
into
be,
account pharmacopoeia and other regulatory requirements.
would it be possible to explain this nature of this buyout items and whatever process we do versus what we do the manufacturing? In case of, I understand how the MCC is made from the wood pulp, it is made, adding to the certain chemicals into it. Now, would it be possible to help us explain what this 3,000 tons and what is the value add that we do? Maybe this also answers the questions of lower EBITDA margins versus the other players.
Definitely, sir. Sir, basically, say, when it comes to bulk drugs, say, whatever the, say, uh, contract that what we have, say, engaged so far with the outsiders, wherein that we have termed as trading. So basically 2 process we carry in-house. One is a blending process, and the second one is an homogeneous particle size. I don't, to the extent what we understand, that we have use of latest technology, that is an say use of vibro shifter, wherein the blending process is carried out, and one is for bulk drug homogeneous particle size. We have a specific machinery in place, wherein the particle size is homogenized, which is required as per the pharmacopoeia norms. So that 2 processes carried out by us. Yes, and to answer your second question, it has a certain level of drop in the EBITDA margin when it comes to a particular procurement of semi-processed goods and selling it to an outsiders, when it comes to as compared to the in-house manufacturing activities.
Perfect. That really helps.
Yes,
And when it comes to the value-added products from phase 1, do we have the customer approvals, or would it take certain time to get the approval and to get the quantity sold, to get the asset utilized in year 1, year 2, year 3?
Our chairman sir is going to respond to your question, Priyank bhai.
Yes, thank you. Yes, already we have started the activities to get the approval from our existing as well as new customers. So already we have started to send the samples and certain documents, whatever is required to get the approval for this new product for phase 1.
Great, Vasant bhai. And this homogenization of the particles that we, the homogenization that we do from the trading portion, would it continue even after, say, phase 2 of MCC comes up, or would that get insourced, and that would also further lead to improvement in the EBITDA margins? what would be the broader strategy over there?
According to current market scenario, actually, we don't require to have receive any outside material. So we would have enough quantity material from our unit 3 phase 2.
Perfect. So that means that once the phase 2 is up,
Yeah.
we would then look forward for a better EBITDA margins even from the MCC like to like.
Yes.
Got it. And in terms of raw material, what's the scenario in terms of wood pulp? How do we make sure that we are hedged towards the increase in the raw material prices, and how much time it would take to pass on the same increase in cost of wood pulp within the MCC and the other value-added products?
Sir, we have a system in place wherein there's a fixed purchase price for the wood pulp for at least for a period of 1 quarter. Accordingly, the order books what we take for the finished goods is read with say if you have order book for around 3 months, then the necessary prices of wood pulp or the quantity commitment for the wood pulp is already ensured us before taking further order book. If there is an say abnormal increase in the certain price apart from wood pulp, or let's say in export, if it is ocean freight, then definitely it is passed to the customers, for which we have necessary proof available with us to show to the customers wherein the increase in the price is passed on. So basically, in the export market, the business model what we follow is a kind of a quantity commitment kind of a scenario. Price will always fluctuate if there is an abnormal increase in the price of raw material, and in export in the price of raw material as well as the price of ocean freight.
Mr. Manjeet, you can ask your question now.
Yeah, am I audible?
Yes, sir.
Okay. Thank you, sir. Sir, I had two questions. One was if you could explain what the contingent liability issue is with the NGT. I don't know about that. So if you could just explain, that was one. And second question, I just wanted to understand, on the last call, we had discussed about the related party transactions in the company. So if you could give us some visibility as to by when these related party transactions will sort of start trending towards negligible, because they've been quite meaningful. So if you could just touch upon these two, please.
Sir, if we talk about, if you answer to your first question, that is NGT matter, say the problem is across the industries wherein, say, without taking much base, the notice is served to the, say, across the industries. So we are not the only unit wherein such notice has been received. For unit in Dahej SEZ, say there are many units wherein such notice is been given by the environmental department. That is precisely termed as NGT matter, National Green Tribunal. When it comes to say contingent liability, when it comes to having a financial impact in the balance sheet, there are three criteria whether the liability will not be in our favor, rather we will be to pay the liability. One is remote, possible, and probable. So as of now, and looking to the developments and the hearing that is happening on a say monthly or quarterly or say quarterly basis, we don't foresee any kind of an say lapse from our end. So it has been classified as remote, wherein no impact in the financials can be seen in near future.
No, sir, I wanted to understand in case it goes against us, and I'm sure we can appeal, to a higher court as well. But as step one, in case it goes against us, what is the penalty or liability which will come up? What is the amount which NGT has
Sir,
put on us? That's what I wanted to understand.
the penalty amount is already status bias in the contingent liability. It is 4.11 crores. And
Okay.
looking to the say strong shareholders fund and equity what we are having, we don't see, even if we refer to the materiality concept, I don't foresee the amount is that substantial for us to, as we have good amount of shareholder funds available with us.
Sure. Very clear, sir. And the second point on related party transactions, please.
Sir, the related party transaction for H2 financial 25 has been reduced substantially. It is almost, say, it's very less as compared to the earlier period. Going ahead, as we have said earlier, most of the activities will be carried out in-house by us. So we can see the negligible level of related party transaction in the near future.
I hear you. And sir, one last question, sorry, was if you could just touch upon in the opening remarks, you mentioned that you have started working with Indian MNCs. So if you could just give us some idea about what are the new customers you have added in the last 12 or 24 months, with whom you are not working, let's say before FY'23, and who these MNCs are. That was my last question. Thank you so much.
Sir, taking into account certain business sense and the say investment period of say the marketing team, it will be very difficult for us to reveal the name of the customers. Taking into account say the details what we are discussing right now can be in public domain as well. We can share the industry that what we have catered to, but it won't be possible for us to share the name of the say customer or the name of the MNCs.
Sanika, you can ask your question now.
Hi, sir. Just one last question. So, when we say we're looking at 70 crores of revenue in first year of operation from Unit 3, so that is going to be in the H2 of this year, or is it over one entire year of operation?
Madam, that all depends upon the exact date of the commercialization of Unit 3, Phase 1. Based upon that, a tentative figure was said in the PPT. So just to give a rough idea about if the Unit 1 or Unit 3 Phase 1 works at an X capacity for an X number of days, tentative revenue of 70 crores can be expected. It was no way a kind of a forward-looking guidance from our end.
No, no, not in terms of forward-looking guidance. So I was just trying to understand, is that 70 crore number based on entire 1 year of operation, or it was based on H2 only, like
No, madam.
half year of operation?
No, madam. It was for say around 6 months of operations.
6 months of operation. Okay, so if everything goes well, we are looking at 70 crores of revenue from Unit 3 in H2 of this year.
Yes, please.
Okay, okay, thank you.
Thank you.
Mr. Aman, you can ask your question now.
Hello, am I audible?
Yes, sir, please.
Sir, my question is on tariff side. With the recent increase in tariff on import product in US by the Trump administration, pharmaceutical companies are currently in relief, which are among our key customers, but in future may experience a negative impact on their revenue. If the tariff get implemented in this context, how do you assess the potential impact of this tariff on our business? Because if pharma production itself get down, the consumable demand will also suffer.
Hi, Aman. At this precise moment, we do not see any tariff being levied on our on the product what we are manufacturing. But just in case, if there is anything turns up in future, we have a plan which we are working on, so that will be taken care. But as of now, there is no tariff as such on this particular product. Which is
So
on
can you
this.
elaborate that plan?
Currently, we cannot disclose anything. Uh,
Okay, sir.
Mr. Dinesh, you can ask your question now.
Hello, can you hear me? Hello?
Yes, sir, please.
Okay, sir. Thank you for giving me another opportunity. Sir, my question is, as you mentioned, our raw material is mostly wood pulp, right? And just want to understand, where do you source this from? Like, is it imported from other countries, or like it is local produce? Because that will have an impact on your cost as well, right? Gross margins. That is my first question. If you can answer that.
Sir, basically, majority of the wood pulp there in India, there are only couple of manufacturers of wood pulp in India. And to the extent what we understand, that wood pulp is used captively by them. So our wood pulp, that what we say import, is basically imported from South Africa, USA, Canada, Sweden, and Indonesia as well.
Okay, and have you seen any large change? Because this is something new for all of us. Have you seen any large raw material price changes when you import because of whatever is happening in geopolitics? Maybe it's COVID, it's Ukraine war and stuff like that. Have you seen any volatility in the raw prices, RM prices?
Sir, if we talk about the COVID era, everything was abnormal. So yes, during the COVID, there was an say abnormal fluctuation in the prices of wood pulp. But now everything is back to pre-COVID levels. So as of now, when we are speaking, we don't foresee any kind of major change in the price of raw material. And in case if there is any increase or decrease in the price of raw material, that will be taken care by offsetting the sales of finished goods.
Okay, sir, sounds good. So the second, on the same lines, you mentioned we are supplying our products to pharmaceuticals, food, and all that. If you could give us the percentage-wise breakup for these industries in terms of revenue and volume, that would be really great, because it will help us to understand how do you foresee things would pan out in the near future. Like, will it the percentage of pharma and food bakery would change, because I assume those are at higher margins, right? If you could give us a breakup of that.
Sir, around 65 to 75% over for finished goods is catered to pharma segment.
Okay.
Roughly 15% comprises of food and nutra, and 10 to 15% it's an technical grades and the new applicants of MCC that we have come out with from last 2 years.
And are the margins remain same across these products, or they
Sir,
vary?
it depends upon the certain. If we talk about say, let's take an example. If goods are sold to an US markets, then the margins are quite say on higher side. So it depends upon country to country. But for if we talk about domestic, the margins are on similar levels.
Okay, okay. So, and do you think the margins would change from henceforth because we will be adding more premium products across these industries?
Definitely. Yes, definitely, sir. The margins are going to improve, taking into account present plans of the export ratio, what we are planning for Unit 3, and then Unit 1 and Unit 2, even the export percentage is going to be on higher side as compared to the reported period.
Okay, sir. And really great, discussion with you, sir. And just request you that, as the previous participant mentioned, that we should do more of these, con calls with investors and analysts. So that helps us to make great investment decisions. Thank you very much.
Definitely, it will be considered positively, and we'll try to improve on it, sir.
Thank you very much, and all the best.
Thank you, sir.
We'll now take the last question from Mr. Prabal. As there are no further questions, I would now like to invite Mr. Vasant Patel to share his remarks.
Yes, thank you very much. Thank you very much, all stakeholders and participants on this online platform. And thank you very much for sharing your concerns and queries to us and giving us for this opportunity to serving you. And thank you very much once again.
Thank you, sir. On behalf of Exxon Microcell Limited, we sincerely thank you for your time and continued interest. We appreciate your participation on today's call. You may now disconnect. Thank you. Have a great day ahead.
Thank you.